So how will understand which is the level 1 entity? Level 1 entity is one which has securities listed or in the process of listing within or outside India on a stock exchange. Level 1 entities are banks, financial institutions and insurance companies. Level 1 entity has a turnover more than 50 crores and the public borrowing of a level 1 entity is more than 10 crores. So now let us understand in a reverse manner. Level 1 entity, how will classify a level 1 entity? If any entity whose turnover is more than 50 crores and its public borrowing are also more than 10 crores, and such entity is a bank, financial institution and insurance company, and such have a securities listed or in a process of listing within or outside India on a stock exchange, then it is a level 1 entity. And simply last, holding and subsidiary company of a level 1 entity is a level 1 entity. It is a simple way of classifying level 1 entity. Okay, how will classify level 2 entity? Level 2 entity is one which is not a level 1 entity, quite self-explanatory, whose turnover is less than 50 crores but more than 40 crores. Are you understanding it? The level 2 entity is someone whose turnover should be more than 40 crores but not more than 50 crores. If more than 50 crores, it will come to level 1 entity. I hope you all are understanding. And its a public borrowing should be less than 10 crores and more than 1 crore. So if it is more than 10 crores, it is level 1 entity. Hope this is clear to you all. And finally the end. Holding and subsidiary company of a level 2 entity is the level 2 entity. Quite simple. This classification is over. Now we'll see level 3 entity. Very small it is. Level 3 entity. Level 3 entity is one which is not a level 1 entity and not a level 2 entity, and it is end. So level 3 entity is one which is not a level 1 entity and which is not a level 2 entity. I hope this is clear. So firstly, I want you all to please pause the video and copy this much, level 1 and level 2, and level 3 you can write it on your own, but don't worry, I'll be showing it to you all. I hope you all have copied level 1 entity and level 2 entity, level 3 entity. I know you all have written it on your own, but still I am showing it. Hope you all have copied this much again. So now we'll move on to AS1. We have understood the accounting standards. Firstly, what is accounting standard? We'll not revise it again. We'll revise it after AS1 because it will be more understanding after AS1. We have completed with basics. We have 9 accounting standard, out of which 2 accounting standard are the practical sums. So that means we have finally only 7 accounting standard. AS14 is hardly asked. If it is asked, you can skip it. I have always seen it. AS14 is never asked in a compulsory question, but still I'll advise you all to read the theory. It is very simple. As we'll be studying account amalgamation, then only your theory will be also covered over there. So there will be no separate video of AS3 and AS14. Only all remaining 7 AS will be covered in this accounting standard video. So as I told, we will be moving on AS1, disclosure of accounting policy. Very simple, and it is asked in exam also. They ask such silly AS in exam, in IPCC exams. So it is very easy. There are paragraphs, but I assure you all will remember the paras, and quoting paras will help you gaining good marks, because this accounting standard is a theory. It is a complete theory based chapter, but it will help you all to score 4 marks, easily 4 marks. Type 1 entities we have covered. We have seen advantages and disadvantages of accounting standard. You all are studying accounting standard, so you should know why you all are studying accounting standard. The basic question that any student asks is why we are studying accounting standard. What is the use of studying accounting standard? Okay. Types of entity. I'll show you the question asked in the practice manual. List the criteria to apply for rating a non-corporate entity as level 1 entity for the purpose of compliance of accounting standard in India. So you all know how to classify a level 1 entity. So it is given over here. See how they have given. I know it is not visible, but you can see the page number. You can please open your practice manuals and read it with me. Entity whose equity or debt securities are listed or are in the process of listing on any stock exchange, whether in India or outside India. See, we have already covered over here. Second, banks, financial institution or entities carrying on an insurance business. So we have covered that also. All commercial, industrial and business report entity whose turnover exceeds rupees 50 crore in the immediate preceding accounting year. So we have covered that also. All commercial, industrial and business reporting entity having borrowing in excess of rupees 10 crore at any time during the immediate preceding year, holding and subsidiary entity of any one of the above. So holding and subsidiary company of a level 1 company is a level 1 entity is a level 1 entity. Hope this is clear. We have covered the normal theories also. Okay, there is a possibility of ICI asking advantages and disadvantages of accounting standard. So whatever I have given, please write it properly and memorize it. Now we are going with AS-1. AS-1 is a small C. Only 1 and 2 questions are asked in the practice manual, but this is something very important. You should know what is accounting policy. You all might studied in CPT, but there you might not have got a clear idea. Now you will be getting definitely a clear idea of it. So let's start a fresh page. AS-1, disclosure of accounting policy. What does accounting policy means? Accounting policy means or refers to specific accounting principles and the methods of applying those principles applying both those principles which are adopted by the enterprise in preparation and presentation of financial statement. So we'll read it again. Accounting policies refers to specific accounting principles and the method of applying those principles adopted by the enterprise in preparation and presentation of financial statement. What are accounting policies? Accounting policies are adopted by the entities. Accounting policies means, firstly you should know what are accounting policies and how to select accounting policies. Okay, so we'll see it in a further lecture, what are accounting policies, how to select accounting policies and all. Accounting policy simply means the depreciation, what I told you, the SLM method and the WDV method. In that, how we select, how appropriate our accounting or a financial statement get. So it is depending on the enterprise, the management, how to select accounting policies and principles, how to adopt it. So this is a small introduction. Now let's move on. There are few small things you should know before moving in accounting in IPCC, that is notes to account. What does notes to accounts means? This all will be covered in accounting standards only. So as and when you will be moving ahead, you will be not having doubt what is notes to account. Notes to account is explanation. Notes to account is an explanation of the management about the items in the financial statements these are the integral part of the financial statement. Firstly, what does financial statement means? From when I am speaking financial statement means balance sheet, which covers trading account and profit and loss account, balance sheet plus cash flow statement plus notes to account. So the financial statement include all this. Below balance sheet, notes to accounts are written. Notes to accounts means explanation of the management. Who are the management? Management means the persons who are responsible of preparing the financial statement of the entity are the management persons. About the items in the financial statement, these are the integral part of the financial statement that you came to know. But why it is given? The explanation is given so that when the reader of the financial statement takes the financial statement in the hand and he suddenly compares the financial statement, that is the balance sheet, and the balance sheet is in this manner. So there are the balance sheet is not in T format for the companies, it is in the normal statement format, in a statement format in which 2 years comparison is there, the present year and the previous year. So if there is a difference between the present and the previous year, so why that there are differences, so such differences and why such differences are there are written in notes to account. So these are the explanation of the management about the items in the financial statement, why they have changed, why they have increased or decreased, why if they are returned off and all. Okay, so your basics should be strong before starting accounts of IPCC.